Hello, Chad Krober here, your purpose-driven lender. Hope you're doing well and wanted to bring you some thoughts in regards to our February economic update and observations that we're seeing in the marketplace and how those might potentially affect you as a homeowner. So first of all, I would imagine that you have seen headlines talking about inflation being at a 40-year all-time high. Much of that is highly influenced, of course, by supply chain issues that have been created over COVID. And many people are wrestling with this idea of, well, why is this such an issue, especially in the United States of America? You would think that our economy could handle some delays, some challenges, etc. One of the components that I've looked into is that many institutions operate off of what we call just-in-time inventory, and they use historical precedents to measure what to order and when to order. And of course, you have computer software that does all this for you and tracks all this for you. But what happens with just-in-time inventory is that if you lose that historical precedence, which happened over COVID, then you do not have a track record of what to order and when to order. And then on top of it, because of COVID, there were higher demands and there were rush on certain things, or there was a push on certain areas in the US economy. And that demand skyrocketed certain areas. And so you combine all that together, that is why we continue to have the issues that we have with supply chain issues in the US economy. So the best thing we can do is just continue to move forward and take care of our families and buy what we need when we need it. If you want to put some stuff away for a rainy day, that's totally fine as well. But hopefully we will see the just-in-time inventory historical precedents components continue to create a larger history, and then stores will be able to order and manufacturers will be able to order, etc. And they'll know what they need and when they need it. And these delays will hopefully begin to be less and less of an issue in 2022. Interest rates are still historically low. The 30-year fixed, for the most part, has pushed up into the high threes right now. The one piece that I will say is that equity is also at an all-time high in home values. And so that creates a debt reduction opportunity for many individuals. So yes, it's great to have a super low interest rate, but with all-time high equity in our properties, this is a great opportunity to potentially look at refinancing and wiping out a lot of debt that you might be carrying. And that in turn could totally change your monthly budget from a total output standpoint, not just your low monthly payment that you have, but you could in essence create a much better overall monthly budget because you would have no other debts, or you would minimize your higher expensive debts and just have your mortgage payment. One other piece that I hear people talking about is they're like, well, I don't want to sell my home and then go buy a home because prices are at an all-time high. Bear in mind, your home is at an all-time high. And so it is all relative, okay? If you sell at an all-time high, you're buying at an all-time high. If you sell at an all-time low, you're buying at an all-time low. It's relative. And so the opportunity to find that next move up home is there. And if you are prepared in advance, pre-approved, pre-underwritten, ready to go, that opportunity could be there to not only allow you to make that move this coming year if you need to or want to, but also be able to do debt reduction as well. Anything else that we can do for you or questions you might have about what's going on in the U.S. housing market, interest rates, or the economy, reach out with those questions. Would love to hear from you. Have a great February.